Banks is where it's all happening today. The Nifty Bank has also hit a fresh record high. Gaurav now joins it with the fine print of the banking numbers that came out over the weekend, including the big ones, HDFC Bank and ICICI Bank.
Well, let's talk about the big banks. HDFC Bank, when we look at it, profit increased almost by 11% on a year-on-year basis. And what remained positive is that the net interest margins, they declined by 8 basis points, but it was in line with the street's expectation. The asset quality, that also remained healthy. The credit cost came in at around 0.5%, and at the same time, management said that in FY27, they will grow faster than the industry. Apart from that, when we look at ICICI Bank, results were good, but at the same time, when we look at the other metrics, net interest margins, that declined just by 4 basis points. Now, it was a positive actually. In fact, when we look at profit, that increased by 5% on a year-on-year basis. But now the street is a bit concerned about net interest margins growth, because remember, management said that the margins are likely to remain range-bound in the next quarters. And now brokerages say that this is actually a bit negative, given that other banks are giving a guidance of improved margins in the next 2 quarters, and whereas ICICI Bank says that the margins will remain range-bound. Apart from that, there were some small banks who are buzzing in trade today. First, let's talk about AU Small Finance Bank. Now, the key triggers which are actually driving the growth. First is that net interest margins that expanded almost by 5 basis points on a sequential basis. Apart from that, the credit cost, now that declined almost by 26 basis points to around 1.7%. And in fact, management says that the credit cost is likely to be around 1% for FY26. Apart from that, when we look at loan book growth, that also was healthy at around 22%. When we talk about DCB Bank, here also we saw net interest margins actually expanding almost by 3 basis points. And at the same time, this bank also gave a positive surprise in terms of credit cost that declined sharply by 28 basis points on a sequential basis. And remember, management, while talking to CNBC, also said that the credit cost is likely to remain somewhere in the range of 40 to 45 basis points. Remember, the bank is also moving towards the 1% ROA mark, which is positive. Lastly, let's also focus on IDFC First Bank. When we look at net interest margins, although they declined almost by 12 basis points, and now they stand at around 5.6%, management said that by the end of FY26, we will see net interest margins somewhere in the tune of 5.8%. Credit cost, now that declined almost by 50 basis points, and here also management gave a positive guidance, and at the same time they also said that the bank will achieve 1% ROE in FY27, which is currently at 0.4%. All of these banks, when we look at the stock performance, they are up more than 5% in trade, so definitely it will be worth watching out on how investors gain in trade from these banks in coming days as well.
Thank you very much for that, Sudeep.